What's going on, everybody? It's Monday, June 5th, 2023, Daily Log episode number 11. Today, we're going to cover ES and the price action that unfolded, some of the things that were commented throughout the Telegram in the morning and then the afternoon session when unfolded. So, leaving off of yesterday in the weekly forecast, I annotated how the weekly time frame, the fair value gap here, we fully closed that in today. So I just want to make that noted, because we do have a volume imbalance resting underneath us. Not saying it's going to gravitate towards that, but it's something to keep your eye on. Just if we start breaking down, I'm not foreshadowing anything, but it's just something to note. On the daily time frame, we created a fair value gap, which was annotated yesterday in the weekly forecast. I think these are pretty easy to predict, especially when you have these large range days and you're expecting some type of retracement, or maybe it's just a like today was a Monday. We did have a news driver event, but if you don't have a news driver event coming off of a large range day like this, especially on a daily time frame, you can predict these type of days where it creates a fair value gap, much like we had last week. And I mentioned this a few times. I think it's fairly easy to predict that, and it's a good thing to note because now we do have this fair value gap in here. It is a good sign if we want to continue higher. I'm curious to see if tomorrow or possibly Wednesday wants to set the low of the week. I don't think Thursday would be probable to set the low of the week. I think either it's going to be tomorrow or Wednesday that we set the low of the week if we're going to continue higher into the volume imbalance. We almost reached up into it today, didn't quite get there. And then you saw the cascade lower. Today was a little bit difficult for me to navigate. I'll touch on it and how high resistance liquidity runs really work. I know we've been in this for a long time. We're still inside of it, so don't, even from the message on this weekend, don't get your hopes up that we're just going to automatically spring out of what we've been in. I'm still expecting high resistance liquidity runs. I'm still expecting some type of consolidation, seek and destroy profiles, etc., until we start moving in some type of orderly fashion for weeks or months on end. But it's a good note that we do have a fair value gap here. Watch to see tomorrow if we dig down into that. If we're still residing above it tomorrow, and we do have a good pool of sell side liquidity, it's perfectly okay to short into that fair value gap because you understand the macro perspective that, yes, we're still overall bullish, but you can short into that because you're looking for a retracement to then go higher. So that was the reasoning as well today to look for shorts. Is I was looking for some type of retracement. We've been expanding. I'm looking for some type of retracement deeper. So looking at the 4-hour time frame, didn't quite meet the volume imbalance. I wanted to see that met today, but we didn't quite get it. Just a point or two shy from it. Still residing inside of this higher premium fair value gap. I'm not sure this is going to hold. If it does and we just start expanding, that could lead to a multitude of things where this gets left as a breakaway gap, depending on how fast price really moves. But that's something to discuss when we get there. Because if we do retrace further, the only thing that I see is this fair value gap down here. We do have a new week opening gap, old new week opening gap residing above it. And the reason, like I said yesterday, that I don't want to see this really met is because that would be problematic towards me. Is I could see at that point sell side possibly being an objective. Yes, it's inside of a deep discount, but when price is running this fast, especially when you're breaking out of a range, I would rather have this fair value gap stay open as a breakaway gap, showing us that we want to elect to have higher prices. So that's my idea for now. Like I said, there's nothing else in the 4-hour time frame there that has any PD arrays for me to really look at. So if this wants to load here, excuse the internet, there we go. So on the 1-hour time frame, we dug down into the 1-hour fair value gap here, mentioned yesterday, ran out the buy side liquidity multiple times in here today. Again, didn't quite meet the volume imbalance, and then we cascaded lower into that. I don't see anything in here. Like I said, there's nothing like a fair value gap, an order block, a breaker. There's nothing residing inside of this area as far as PD arrays for price to retrace into. So it does have a little bit of concern in my eyes. Besides the daily time frame, we could cascade into that and then just find support somewhere with new price. So that could be an option as well. I want to dig down into today and really what unfolded. I think the PM session was obviously the most fruitful. If we dig down into even a 15-minute or a 5-minute time frame, it's probably going to provide the most clarity. So let me dig into a 5-minute time frame here. And we had a news driver event 30 minutes after the open, and I was waiting for that to unfold, and I waited about a minute. My model was there, everything was there. I ended up getting stopped out for about 5 handles. I was perfectly okay with it. It is what it was. Obviously, in hindsight, there's nothing that I would have changed, and that's something that you have to look at. I'll touch on this later, but when you're looking at your P&L, or if you're looking at your equity curve, I think the real equity curve should be your rules and your discipline. Did you follow them? Did you follow your model? Did you follow the things set out for you? And if you can follow that type of equity curve and grade yourself on that type of equity curve rather than your P&L equity curve, because your P&L equity curve is sometimes false, because you can get lucky, you can have variance in your favor, luck in your favor, where your P&L is kind of lying to you. And that's why I think grading yourself and having quote unquote a P&L tracker for your rules and your discipline or things that you do well, that's going to be more important. For me today is I was annotating how there was sell side liquidity resting at 42.86, which we did end up tagging, and then I was annotating 42.80. So off the context that the daily time frame, I was looking to see if we can get a retracement deeper. We took out buy side liquidity here prior to the news event driver. This was right at the open. I wasn't willing to enter in before the news event driver. I wanted to see how that played out. And for me, especially when a news event driver unfolds like that, it's hard to predict that something like this is going to happen. And you can have certain rules where you set out for the first few minutes. And I let a minute play out, and then we dug up into this 5-minute fair value gap in here, which is also a balanced price range. We took out buy side liquidity. We displaced lower in here. We had bearish SMT. We had sell side liquidity resting at that low there, resting at this low here. And then we had the RTH gap resting beneath in here as well. So everything was there for me to take the trade if I real price back in here. This is how it looked. So we had the 5-minute in here, and then we had it all layered 4, 3, 2, and 1. So all my rules were there. The model was there. It presented itself. And the only thing I could say that you could possibly do better is waiting more minutes. But on the flip side, I've seen multiple times where news event drivers use that exact time to dig into a PD array and then send price in the draw liquidity. So I wouldn't have changed anything, did everything correctly. To me, I wouldn't have changed a thing. So just part of the game. But this is how it looked. And then I watched about the first minute play out, because sometimes the first minute will do a huge spike like this. If you go down to a 1-minute time frame in here, excuse my internet, it's a little slow. You can see it at the right-hand corner. But at the 1-minute time frame, we had a 1 minute residing inside of it. So I was looking at this as well, and the news event driver released here, and then I was waiting, dug up into it, and obviously during this time period where the real-time trading, candlestick is trading, it's flickering back and forth inside of that. So I went ahead and took the trade. My stop loss went above here. I'll show it, and got stopped out for about 5 handles. So nothing too major. I took the chance, and it is what it is. After that point in time, we did cascade lower in here to the sell side liquidity, and there was just nothing in here presenting itself to me that I wanted to get into the market. There just wasn't anything fruitful for me to basically re-enter into the market. And again, I think this is super important, is when I'm looking at or reviewing my performance, is I didn't go back in here and try to revenge trade. I didn't get upset or angry that I got stopped out, then price moved in my intended direction and went to my draw on liquidity. I didn't care about any of that. It's simply business. There's no emotions here. This is going to happen to you over and over and over again. But the whole point is your risk management, your money management, all of it's going to do the heavy lifting for you. So I never worry about these things. And I would have been more than comfortable to re-enter into the market, but there just wasn't anything in here that signaled me to go into the market. I was annotating on the 1 minute time frame in real time how there was a breaker in here. These last 2 down close candles were your bearish breaker. And I wanted to just see if price would respect that to send price lower into it. And if you can look even on this side here on the 1 minute time frame, there's not a single fair value gap that formed. There's nothing in here besides maybe an inversion or even a reclaimed fair value gap to really signal you to get into the market. So I just had to sit on my hands, even though it was moving towards my intended direction, even though I got stopped out on the play. It just is what it is. I can't let emotions override me. I still have to drive in the logical mindset. And I think that's huge because my old self, I wouldn't be able to do that. And I'm very proud of myself that I've been able to progress like this, where I'm not tilting, I'm not FOMOing back into the market, trying to, get back any money, because logically there's nothing that's signaling me. There's nothing in my model that says for me to get into the market. So that's a good note. As soon as we took out the sell side here, we ran above that bearish breaker on the 1 minute time frame. I said I was basically done for the day because I didn't know where price was going to go. We went ahead and ran out the buy side liquidity, and all this is high resistance liquidity run. You can see this is on a 5 minute time frame where it's taking such a long time to even get to that buy side liquidity pool. I got off the charts, and then I started looking at the market right around the silver bullet PM session, and I saw this nice displacement lower. We have a bearish breaker in here with this fair value gap here on the 5 minute time frame. Originally, I wanted to see if we could dig up into this. I wanted at least 25% to dig up into that, and I would have been more than willing to enter into it. At that point, we cascaded lower. So what I did is I went down to a 1 minute time frame, and I saw this fair value gap here and the one resting above it. As soon as price moved up into this one here, this is where I entered. My stop loss went above this high here due to spread. So I just didn't want to trail it way too close because it's a pretty short range in terms of points. I mean, from here to there, I was basically risking about 5 handles. So I didn't want to choke it too closely. This is where I was wearing a little bit on my patience. And I stated how, in hindsight, I would have loved to held to 42.80, but the whole day was basically high resistance liquidity run. So it was very hard for me to trust that price was going to cascade like this in a low resistance liquidity run because all day it was very high resistance. And even when I entered into the market from the point at 13:10 to 13:30, I've been in this trade for about 20 minutes. And typically when a trade is in a low resistance liquidity run, it snaps very quickly. You're not in it for very long in here. So as soon as we snapped underneath the sell side here, I took a partial and then I took another partial out basically at this candle here. And you saw my entry and exits. And I didn't get to 42.80, unfortunately, because honestly, I didn't believe we were even going to do that today. I really was surprised by how fast price moved into this blue rectangle shaded box is the 15 minute time frame for value gap. And in hindsight, of course, obviously it would have been great to hold to that, but in real time, it's hard to navigate. If you look at the 5 minute time frame, we dug up into this fair value gap, and that's basically what I'm watching in real time because I entered it on the 1 minute, so I'm watching the 5 minute. And if we closed above this, then I would have basically took the trade off there, would have invalidated it. To make note as well, there's a 15 minute time frame bearish order block that I was watching in real time. Watch it trade up into it, the open there, and even the wick in here. And then we closed, which is a good sign that we cascaded into the sell side liquidity. Something to note as well is we had the RTH gap as support, and then we had the new week opening gap as support as well as soon as we got underneath it. So the RTH gap, if you watched, I believe ICT just did a recent video over it, but you can use it as basically support or resistance, quote unquote, for that current day. It can extend out to 3 days, but I really only use it for that current day if we're trading near it and it's aligning with the trade idea. So I was using that as confluence when price was trading inside of this area by my entry. So that was to make note as well. I thought overall it was a pretty decent day. Like I said, this is something that I wasn't expecting. It was a really fast drop. And as soon as you meet that, as soon as you take out your 2 sell side objectives, you meet a higher time frame PD array in here, bullish PD array, that's when you basically have to go sidelines. There's nothing else in here. Yes, you could have went short, but nothing in here would have signaled me to go back into the market. We're nearing the end of the day. So that was a silver bullet PM session trade in here. I was able to make back the loss from the morning. So that was good. What else to note? I just want to make note of the bearish SMT in here. So we had ES on the top here, making the higher high. We had NASDAQ making the higher high, and then we had Dow making the higher low in here. So that was a bearish SMT, and that's what I was keying off this morning as well. And unfortunately, that just didn't work out. And sometimes what happens with your model is either you're completely wrong on your trade idea, or you simply were just a little too early. And then sometimes, I was a little way too early, and I was able to navigate how I'm not going to re-enter the market just because I got stopped out and it moved in my intended direction. There just wasn't anything in there to signal me back into the market. So let me touch on one more thing. So I haven't kept up to date with you guys since last week. So this is where we're at in the account. We're down basically 0.3%, and I'll touch on it. So I was up last time I think I talked was up 1%. That was due to the EU trade. And then on Wednesday of last week, I took 2 GU trades. I ended up losing about 1.5%. And that's due to GU moving extremely quickly. I wish I actually did a review over that day, because I took a GU trade short and EU went perfectly in the tender direction, but GU just kind of chopped around and ended up stopping me out. So it reminds me why I didn't trade GU back in the day, because it's a little bit too wild for me. And it's kind of why I just placed my attention back into Forex or into futures, because I'm out of sync with Forex and I just don't want my attention to be all over the place. And obviously ES is breaking out of the range, so it gives me a little bit more confidence that we're going to have a little bit more clean price action. As far as the account I want to touch on, I think it's really important to note, and I'm really happy that we're at where we're at. Because being in drawdown, I talked about it a little bit on the weekend, is being in drawdown can really wear on you mentally. And a lot of people don't talk about this. Nobody obviously wants to show this type of transparency, but when you're in this type of drawdown where you're either break even or you're on a string of losses, it can wear on you mentally. And being in drawdown is the toughest position to be in because of that mental capital. You're low on confidence, you can't find your footing, you're not in sync, and all these things are going to basically affect how you trade. And the only way to basically get out of it is to reduce your risk and reduce your frequency, which I've been doing. Even last week on Wednesday, I called it quits. I was done for the week. I didn't touch the account again because I just didn't feel myself. I didn't feel like I was in sync with the market. I didn't want to do any more damage to myself or the account. So I think it's a really important note. I can't wait to show all of you how getting out of drawdown is so easy. And it's only you who makes it difficult. It's only you who makes this journey way, way more difficult than it needs to be, because you're the one putting all of the labels and all of the emphasis on how well you're doing or how well you're not doing. And this all goes back to the original kind of discussion at the beginning of this video, is the P&L. If you're looking at this equity curve and you're looking at this percentage and you're looking at the money, it's not reflecting directly what you're doing. And the mental game of trading talks about this, is how you need to journal your performance. How well are you executing your model? How well you're executing your rules and your discipline, the things set out for you. If you're doing that correctly, but yet you're still not quote unquote winning or making money, that doesn't mean you're doing bad. You're doing everything correctly. That's how trading is. There's so much variance in trading that you're going to get strings of variance where it's in your favor and strings of variance where it isn't. And eventually the strings of variance that is in your favor will outweigh the ones that aren't. And how do you know that? That's through experience. That's through getting yourself out of drawdown, trusting yourself, trusting your system. All of these things are all a mental game. It's all a psychological game. And if you let it overcome you, you're going to bleed out your account. You're going to bleed out yourself, and you're going to ultimately doom yourself because you can't handle the mental pressure. So I think it's extremely important. I'm very happy that you guys get to see this with me, because it's a very, very good lesson. If I was only winning, then it would really show nothing. Yes, that's great, but being able to get out of drawdown, or even being in drawdown and showing you guys full transparency of it, helps you guys way more than me winning. So that's going to be it for today. I will touch base with you guys tomorrow. Until then, good luck and good trading, everybody. Be safe.